Welcome to Admiral Markets. Today is the 20th of March, Thursday, our last live webinar session of this week. And yesterday was, of course, a very interesting day, especially the FOMC statement. We're going to talk about that and more and look at the charts, of course, in just a second. First of all, though, the disclaimer explaining that this material has been made for a global audience. Please take into account that this may not be suitable for all and everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with the risk disclaimer and the content stated in this slide. So thank you so much for that attention. Today we're going to take a look at Fibonacci and wave trading. And well, I think it's a very interesting way of trading. I think it's a very, very challenging but rewarding way of trading. It could be difficult to tackle, it could be difficult to implement, but when you get more used to the method, you start to see more opportunities and more secure opportunities and more profitable pieces. It just takes time to practice, like everything, in fact, in trading. Fibs and waves do work well together because fib ratios are, usually speaking, tied to the wave count. So if you know what the wave count is, you could have a good idea what Fibonacci level you should look for, or what fib level you should look for, let me say it this way, or which swing high, swing low could be important, and this material. Now you can use fibs without waves, wave counting, but and use it in a very non-discretionary method, but there are advantages to adding a bit of a basic wave count or maybe even a more advanced wave count to Fibonacci trading, okay? Because those two are instinctively connected to each other, although, as I said, you don't need one or the other. It's easier for fib traders not to use wave. For wave traders not to use fib is a bit difficult, I think. So the wave counting and wave analysis is not as difficult as one might think. It's just basically tying impulses and corrections to each other. So if you look at an impulse, you say, oh, this is impulse. Oh, this is correction. Oh, this is impulse. This is correction. This is correction. This is impulse. So and then you say, okay, this is probably that. This is probably that. It's just putting, like, placing pieces of puzzle together. If you have a board, right, with 1,000 or 2,000 or 500 piece jigsaw puzzle, just look at wave counting as putting the pieces on the table and putting them in a sense or in a shape that makes sense. That's all, really. Now, can wave counts be wrong? Yes, but it's just basically analyzing if the next move is going to be impulse or correction. That's really it. And I think that people really make it a bigger deal out of it, or make it more difficult, or think it's very difficult because of that. But it's really only impulse correction. Impulse correction is not, in my opinion, that big of a biggie, if you know what I mean. Well, that's my personal opinion. In any case, that's our main focus of today. And we're going to be defining the trend, then looking for opportunities, checking if there are any filters, and using the fibs and waves for that. Good. So yesterday we had FOMC, and what I've read in the newspaper and online so far is that the new Fed Chairman Yellen has indicated that interest rate increasement could happen faster if the U.S. stays on track with its positive, upbeat numbers, which definitely seem to be earlier than the market expected in general. So maybe next year we could already have interest rate increases, which seems like a long gone history, even talking about interest rate decisions for the U.S. and the EU probably. The EU had one, but it was also even, I think, 2 years ago in the meantime. And, I mean, since the financial crisis about 7 years ago, I mean, we've never even talked about interest rate increasements, so it seems really like it's long time history. To a certain degree, 7 years is quite a long time, at least for economics and news announcements. So the dollar definitely got a boost yesterday, and the triangle that I saw as a bullish triangle actually turned into a bearish triangle. The dollar CAD, though, what I saw as a bullish triangle was indeed bullish triangle, and it's looking like a very good breakout trade. We'll take a look at that in a second. Today, we have Swiss franc interest rate announcements expected to stay at 0, and we have some USD news as well, and some other news as well, of course. So let's take a look at the euro dollar. What I thought would have been a bullish triangle, in fact, turned into a bearish triangle, and that's of course something that a news event like this can definitely influence. Right? News events like this, kind of like supersede in a way, sometimes confirm our technical analysis, but in many times also like sometimes actually do the opposite, or sometimes we can expect both, and it's just a news event that kind of like tosses the one side in an advantage. In this case, we got a correction here, and we thought, okay, is this continuation of upside, or will we get another correction like that? And it was indeed another correction. But if Yellen probably wouldn't have said anything about interest rate announcements, it might have gone up to 140. It really depends on this news event, in my opinion. So in any case, now we do see a clear three-wave correction, whereas seemingly this was looking first as the end of the ABC right here. And now we can see that this was probably one part of the correction. This was, I'm not sure, maybe some triangle formation for a B, and we're probably in a wave C. It could be, in a rare event, this could be a wave 1, 2, and 3, but normally wave 2s are not triangles. Most of the time they're wave 4s. So this is probably more or less, there's a higher chance that this could become or is a correction for more upside still. Unless this is a zigzag in some way, I don't know how though. Let me take a look, because this looks more like a triangle to me, but it's never ever that 100% clear, is it, in a way? But this does look more like A, B, C, D, E. And that was a turn for E, for downside. Okay, so whoever bought it in here, because that's what I was saying, try to buy it around here, I said, still didn't do all too bad because we've got to bounce up. Not that anyone should lock in profit there, but if we get the bounce, you can easily move it to break even and maybe take a small loss or a break even trade on that long idea right here. So anyone who took that shouldn't have lost because you got the bounce here. What looked like a bullish triangle and was potentially a bullish triangle like this. Let's see, A, B, C, D, E, right? That didn't happen. And it was actually the opposite. And the one thing we have to keep an eye on, of course, always is the triangle only gets really confirmed that the triangle is broken when price pushes through the trend line. So the green line never really got broken. The orange line did, so the triangle got broken to the downside. I hope that's clear. If you have any questions about wave counts, fibs, let me know, okay? So that was a bullish triangle, or sorry, bearish triangle broken. And if we put a fib from here to here, we can see where did the price go to? Right to the minus 272. From 786 fib to 72 fib. So if you were trading the news event and you were trading the break of this triangle to the downside, you knew exactly what kind of level you should be thinking of. Right? We talked about that, 138.11. The whole week we said if it breaks to the downside, it's going to go to 138.11. Right? So hopefully, if you traded that, you were aware of that. Minus 618 could be the next target. That's at 137.68. However, price is still within this uptrend channel. So if it breaks this uptrend channel, we can see indeed a further fall on this euro dollar. Right? Just like we saw yesterday. Break of the triangle, we saw the fall. So I don't know what you think, but to me it's always, I've seen this year, month in, day out, month in, week out, month in, month out, year in, year out. But it's still quite amazing if you just see what kind of natural rhythm the market has basically when just using fibs and trend lines, moving averages, wave counts to assess what the currency could do. It's amazing, isn't it? So anyhow, this could be the end of the ABC correction. But looking at the strong impulse, I wouldn't be surprised to see follow through personally. However, it is at a bounce spot. Looking at the impulse, this could be an ABC correction. And ABC corrections, don't get me wrong, have sometimes a very impulsive C. So it could end here. But if it does end, what I want to see is a more clear sign that we are moving up. And that's not yet at the moment. It's too soon. Way is saying that the bounce may pull back to a multi-year trend line. And Claudio is saying bear flag, question mark. Yes, to a certain degree on a 50-minute chart it is a bear flag indeed. Oh, no, on a 50-minute chart it is a bear flag, just full dot there. Certainly, totally agree with you. But the thing is why I have, let me say it this way, reservation still, what it will do at this point. Normally, of course, bear flags statistically should be broken to the downside, and we should see follow through with the bear flag to the downside, especially because we have momentum like this. And normally speaking, what should happen is a bear flag and a break like that. One thing we should be aware of, though, with flags and chart patterns is that if they're built near support and resistance, we have less statistical likelihood that price will act as a bear flag and break it and have a good break. So because of that 4-hour support trend channel, this bear flag is becoming less valuable to me. So that's why I said I had a bit of hesitation saying a bear flag. It is a bear flag, in fact. The reason why I'm hesitant to maybe trade it as yet just is because of the fact that it's close to support, and then the psychology of the bear flag is not as strong as it would be with a clear, let's say, more of a clear downtrend in play. Now, this bear flag could break. It could move 500 pips down from here, and it could be a wonderful example of a bear flag break. But in general, what I've noticed, and I don't have any statistics for that, but from what I would have experienced is that when price is at support or resistance, these chart patterns sometimes are less reliable. So that's why, for me, a break of the uptrend channel would be pleasant. And then we could see some follow through here, I would say, down to 136.70, maybe 137.20, depends how much momentum we get to the downside. Let's see, Way's talking about a multi-year trend line. Let's take a look at that. 2008, I think I know what trend line you mean. I think Way means this trend line. Yep, this monthly chart, right? Yes. Yes, that's a very good trend line, and I've had that on my chart as well. Actually, to me, it looks like we're breaking above that trend line. If we look at the weekly chart, but you know, a monthly trend line is very, very long-term. So even though it's breaking according to what I see on the chart, it's still very early in the break. And because it's a monthly trend line, let's face it, even if it turns a bit higher like it would now, it still looks like a respect probably for that trend line. Sorry about that, it's taking a bit long, but I'm trying to get rid of all these channel properties on the right time frame. Okay. Let me just delete them, otherwise this takes too long. Okay. I'll get rid of all of it. Okay, good. Yeah, definitely, Darshan. We'll go to the pound soon. Sorry for that. Just quickly want to show you here that the pound, the euro dollar, has a break above this trend line. Now, the one thing, though, I have to admit is that I'm connecting this top as a third hit. If you don't do that, then you have a different trend line, probably. You have it yeah, it's a tad different. There's not much difference, in fact. In both cases, though, as you can see, price has a full weekly candle above it. So that looks like a breakout to me. So to me, there's still a chance that this could be a dip down from our upside, a hook back to the broken trend line and up. However, of course, if we do break below, let's say, 137, then this is looking more bearish, and this was just a false break, and we're moving down. That could happen. Anything above 137 could still be a dip up, a hook back to the broken trend line from our upside, in my opinion. So it depends how you look at it, of course, but this is my view. Looks like a breakout. Is it a false or true breakout? We'll find out soon enough. 137 is key. Why 137? Because if you look at the daily chart, that's where we have a bottom on the day chart. And that's where we have a lot of tops that could act as support. That's where we have a daily bottom in play. That's where our targets are above. So we should see a bounce there. If we bounce and then break, then this is looking more bearish. So that's my opinion on that one. So let's see how far this correction down can go. And if it's a retracement, I mean if it's a full-fledged reversal, then we need to break 137, in my opinion. Pound dollar, let's take a look. Actually bounced off the 50 fib yesterday, but then bounced back to resistance and fell. Of course, that was also because of FOMC. Let me get rid of everything on the chart, in fact, for the moment. 1 second. Let's do it like that, from scratch. So what I don't like about the pound is just its massive consolidation at the moment, which doesn't make it too appealing to me. We had a bounce off the 50 fib, maybe now again, although it kind of stopped halfway to 1561.8. The correction did stop at the 38.2 fib indeed, unless you're talking about a different fib. Maybe you're fibbing something on the daily chart. That's possible. Not this one. Not sure which. Oh, fib from the down move. Ah, you're talking about, understand. Talk about this fib. No. Oh, you are? This one. Yeah, didn't quite get to 38.2, I guess. Just a 7 pips difference anyhow. It's close. There's a big momentum. So yeah, that always has a chance. If we move correctively like this, then we'll see a follow through. One thing I would like to see is a bit more consolidation, and then a break of a trend line. That would be a good one. Are we going to get that consolidation? Probably not, because we have the entire London session in front of us today, so that doesn't seem likely. If it would have happened, if we would still have the Asian session in front of us, that probably seems more likely. So what seems more likely? I don't think the correction like this seems very likely. What is more likely? Spike up or down, in probably knowing the pound. Spike up probably to the 50 or 61.8 could be a good stopping point. If it does spike down, we would need to break probably below this level. Let me take a look. Hmm, 165. If it breaks down, then I would like to see a break, pullback, and a bounce. I'll be cautious. I wouldn't, be trigger happy immediately. I would want to see some follow through first. But then we could get downside. Upside, not too interesting to me. But if we do stall at these spots, then there could be good moments to look for shorts indeed. Because if you look at it from this perspective, in my opinion, it looks like we got space down to the 61.8 now at 164.70. So any hook back to 166, there could be a good 130 pips there. Seems the most likely at the moment, indeed. I agree. When would things change? When would the analysis look different? Well, I guess then the only thing would have, the only way that I would change my mind is first of all, if we break the 78.6 fib, I would already start to be cautious. Obviously, if we break this trend line, but moreover, if we break these tops in here, well, then things are definitely not the same. And definitely, this was not the bearish move down. Well, it was bearish, but apparently we got the reversal here, and we're breaking up again. So any stop loss would be the safest, or not the safest, but would be technically correct, I would say above 166.50. Or the top, what is it? Let me take a look exactly. 166.54. Even 166.65 if you want to be more safer, but I guess both should do. So let's take a look at the Camarilla Indicator to see if that confirms our analysis. It doesn't have anything to do with fibs or waves, but just for the curiosity, let's take a look. Let's see. Pound is basically looking for 164.50. Wow, that's way, way lower, as you can see. The L4, the reason why I want to be careful, confirmed here because we're basically still above the L3. Upon the break of that, we're bumping into the L3. Sorry, let me say it this way, which could be a support level. L4 way lower. H4 not as high as I expected. It's actually still right at the 786 fib, I think. Yes, the H4 is right in front of the 786 fib. So I would not look for that H4. Because if you buy the H4, you're bumping into the 78.6 fib. That's not good. Forget it. But if we break above it, then maybe make a bull flag and bounce off of the H4, that would make more sense. Otherwise, we have H3 at 38, halfway 38.2 and 50 fib. Personally, I think the fibs are more important, so I mean, if they're giving confirmation, that's great, but this seems to be halfway to fib, so it doesn't seem to be that giving the confluence here. But if it hits the 38.2 fib and maybe just makes a tad of a more upside, it could hit the H3 and then pull down from there. It's actually moving up now as we speak. And it's actually reaching a pivot point and the 38.2 fib. So it could be interesting for a sell very, very soon. It's worth keeping an eye on, in fact. Oh, that 1 minute chart looks a bit strange. Let's see. It's very close to a resistance spot here at 166, 165.62. Then we got a pivot very close to the H3, a 38.2 fib. And we know that if it breaks, if the pound dollar breaks a consolidation like this, a Asian session consolidation, and it pops up above it, then that is a likely stalling spot, either a reversal spot or a stalling spot for more upside. But it's going to get some reaction to it. So this is interesting. Let's keep an eye on this. I'd like to see 165.62 be hit. $165.61. $165.62. Let's see, what Indy is that H3? It's called Cameron. That's called the Camarilla Indicator. Yeah, we got Swiss news indeed soon. There it is, Camarilla, right there. Now the stop loss, technically, as I said, the safe stop loss would have to be all the way above 166.56. Now that's not something I would use for this trade. This trade is just meant for a small risk. So it would probably be above 165.70, above the H3. It depends. You can even go above the 50, but I think that's a bit too much. Maybe about 165.73. It's a tight one, but we hit 165.60. Let's see if it makes one more upside. Maybe not. Maybe 165.60 was the turning spot, not 61 or 62. Is there any pound news, by the way? Let's take a look. Only CBI industrial trend orders. It's going slow. Sorry about that. Let's just wait a few more seconds. We're bouncing back and forth here on this 1 minute chart. Almost no movement. Ah, there it is. Some upside. Or maybe I'll just put a pending order otherwise. aiming for 165.40, which is a conservative target because it's basically aiming back at this range, the Asian consolidation, basically. So let's see. That's just my idea. Maybe it will be a loss, but it's aiming for a 2-to-1. Well, at least as long as I get taken in, I still need one more pip. It made a shoot up, but it hasn't hit the 165.62 as yet. So let's see. Anyhow, I don't want to bore you too much here with this. Let's take a look at the. I should have done a pending order probably right away. I just didn't think about it at the time. Euro dollar. Where do we have the Camarilla? We have an H4 at 138.85. We have an H3 short at 138.50. L4 all the way down at 137.47. Wow, that seems pretty far away from here. Down to 136 to 90. That seems very far. Interesting. We have a pivot point in H3 short though, pretty close by, 138.50. That could be indeed an interesting resistance zone for downside, which is also the 38.2 fib, as we can see. Multiple things coming in there at the same spot. So 138.50, if price gets that high at least, could be interesting. Let's go back to our charts. No more charts. Let's see, 137. I'm just curious if no, not hit as yet. Anyhow, let's forget the pound. I think we've talked about it enough. I'm trying to see the 5-minute world, but the data, now the data wasn't loaded yet. Good, now it is on this particular chart. Seems like we went and hit the high was 165.617. Missed my entry by three tenths of a pip. That's funny. Couldn't get closer to that, I guess. Let's see if it still gets taken in. Let's move over to Euro Pound. Euro Pound is breaking this uptrend channel. Getting some bigger consolidation as we speak. And I wouldn't be surprised if the Euro Pound starts retracing a bit. So we can see maybe a bit more Euro weakness than Pound weakness. And we might see a fall, for instance, to the 38.2 fib down at 83.19, which is this bottom as well. That seems pretty likely now at the moment. Let's take a look at the dollar Swissy. We see a very strong dollar Swiss bounce off of this support or bear flag. In fact, it looked like a bear flag or maybe even ascending triangle like this. Broke indeed to the upside with the dollar strength yesterday, and that upside looking like a lot of momentum. Now, roughly speaking, we can still be at the top of a resistance. We're also back at the long-term moving average, so it's not an easy spot. This does look like momentum, and one would think that this is likely. However, because we had resistance, it could also break down, in fact. So both sides have their potential in a way. With the Swissy news announcement, we'll see what effect that has on this dollar Swissy. For the moment, though, downside seems risky because of the big impulse. This does look more like a bull flag. And because it looks like a bull flag, I would rather see, for instance, the 50 fib being broken before thinking that this is more downside. Because anything above the 50 fib could be normal bull flag territory, and we could see a bounce off of that. Yeah, or the 38.2. I use the 50 just to be a bit more conservative, but usually speaking, bull flags indeed absolutely you use the 38.2 fib. And that's at about 87.94. So anything like there could be an interesting long at 38.2 fib to see if you can catch the upside. If the long is taken here and price struggles here too much, you might want to reduce the risk to very small or put it at break even, just in case this does continue down in its flag. Okay, this is the daily chart. The question is indeed how and when can we see a bounce, because it is very, it's very consolidating. The last piece we have a support level a bit lower, so price maybe could still see downtrend up to 85.55. Then we have some support level there to reckon with. However, looking at the daily, we do see a falling, maybe a falling wedge pattern like this or like this. Depending on how you put the lines. So there is some weakness in the sense that the bottoms are not going as far every time we break the bottoms, especially recently. And there is divergence between these bottoms. If we look at these bottoms like this. So with that said, these two things together, plus the fact that if you look at it, the weekly chart, we had, let's see, we had a big impulse here, right here, hook back and up to the 272 target. This target still is lingering, I think. The question is only where. It could go down to the 38.2 fib and then bounce. So I'm not saying that this downside is totally over. It could still bounce from the 38.2 fib, for instance, and then go up to the minus 618 target. If it doesn't do that, then I would be especially interested in this if it breaks the falling wedge. Sorry, I'm not really, but today I'm stumbling about my words, I can see. Also, one fib we can add, because we went from fib retracement to fib target here. So we could put a fib on there, and if we put a fib on this particular weekly trend line, we can see where did the daily chart stop at the 886 fib, after it stopped at the 786 fib and at the 61.8 fib. Now that itself could already be a bouncing spot. If the 886 fib is not the turning spot, then we're going to probably see most likely that 38.2 fib down at about 84, 85. But in the long term, it looks like Swissy, to me, is at a relatively good spot, eventually now or later down, a bit lower, for a potential bounce up to 108. Will that happen? Or at least that was always my long-term analysis. Will that happen? We'll find out. Obviously, if we break the 38.2 fib, let me put it back on. If we break this 38.2 fib, then we got space down to the 50. When we break the 50, down to the 61.8, and etc., all the way to double bottom. I'm not saying that that's not possible, but we'll see. We'll take that step by step when we get there, of course. For the moment, this is looking like a bouncing spot on the daily due to the 86 fib, and due to the fact that we are having a falling wedge with the divergence. So if you look at the 4-hour chart, the question is, have we broken out of that? That's a bit less difficult to see with this trend line. It's not as straightforward or neat. We could be right at it, and we're right at the long-term moving average. So a break above it, we could see potential upside. That's about it, I guess, from the dollar Swiss perspective. Let's take a look at the dollar CAD. So, by the way, for those who took the trade yesterday, I have the stop loss now tighter at below this 4-hour bottom at 111.13. I'm trail stopping, as I said. I trail stop the 4-hour, any 4-hour fractal, and we have one here. Although it's very small, we do have one. So I actually made a bit of a miscalculation with the R-to-R ratio yesterday. I said I think 4-to-1. I actually made a miscalculation there. It's a lot less. The stop loss was about 140. The target is 210. It's closer actually to about 1.5 to 1. made a miscalculation there. Anyhow, still 1.5 to 1 is good enough for me, considering the likelihood of this triangle break, in my opinion. Right, but just wanted to set the record straight that that was a miscalculation from my side. The original stop loss was here, right, where I have the solid red line, and I have moved the stop loss now to protect or to reduce some of the risk, and I think the risk is about 1/3 still remaining of the original risk, or maybe just slightly a bit more, 35%, which is good. I mean, the less risk we run, the better. Of course, we have to use technical sound stop losses and levels, but if we do and reduce the risk, that's great. So this trade is going excellent. Anyone who tuned in or joined our webinars knew that the triangle was possible. I already talked about the triangle ever since the fact that we bounced off this 50 fib with a very big momentum and said, you know, still a resistance here. We could see it down, then an up, and then even a potential down again to make this triangle. So that exactly unfolded, which is good. And did anyone trade this by any chance? Out of curiosity. Claudio, did you take the trade as well? Anyone else? Great. So fingers crossed. It looks good though. And this is a 50 bounce, so our target is -272 at 139.80. Okay, tell me, how did you trade it? Just out of curiosity, if you don't mind sharing. It'll be interesting to compare. You sold these tops here. That's good. Or did you sell the breakout here? Okay. Gotcha. Okay, I was expecting you would take the breakout yesterday. No, oh, by all means, no problem. No problem at all. Everyone has their own method of trading. It's just, it's actually very interesting to compare the differences. So by any means, anyone who wants to share a trade, I mean, it's you don't have any responsibility to, or need for that at all. Just whatever you want to trade it, of course, definitely. So we got a 50 fib here. The target is the -272, but it's only a first target, right? Because if you look at the -618, that is definitely lingering. So what I'm expecting is an impulse, a momentum up to the -272, a bull flag, and then one more break up to the -618. So what you see on that pattern, what you see the arrows on my chart, that's what probably will happen, roughly speaking. I would expect. Seems likely to me. We also can take a look at other things. We can calculate the thrust before the triangle, which is 600 pips, added to the end of the E wave, which is here at 110, and then we get 116. And where is 116? At -618. What does that mean? The thrust before the triangle is equal to after the triangle, and then this is what you get. Up to 116. That's why I think 116 is a very likely target. Did you see that? Just in case you're multitasking and not looking, I'll draw it again. Like that. Chart patterns are very useful, good things to have in one's arsenal. And if you can't recognize them, then it's the best is to trade them, first of all, but also just to practice trade them, of course. But also go back in the past, go into your charts, go back at 2 years, and start moving candle by candle forward and try to spot them. And that definitely helps the pattern recognition. Our brain has to be practiced to recognize these patterns. For me, it's because I've probably practiced them a lot, they seem very natural, very easy to spot. But I guess that when I started out, I don't remember exactly, it was maybe more difficult to spot. I don't remember. I guess it should be, I assume. In any case, practicing it will, of course, help everyone's pattern recognition. Auto charters, I've never used it, so I'm not sure, actually. I've heard, I think, good things from other people, though. I think that as any tool, you probably still need to check it yourself and see if you find it valuable. Also, even if you use it, I guess, using still your own confirmations would make sense, I guess. So that I couldn't say anything more than that, as I never used it. So as you can see, I could even maybe move my TP up, in fact, because what I'm doing now is aiming for the conservative target. But what I do think is that if I look at these daily bars, I think this is a lot of momentum. And it depends, of course, how the break is. If it's a break with a little momentum, I think the minus 272 target would have been good. But this is a big momentum break. I don't know. Could be worth moving it up for the moment and seeing how far it can go in one shot. So for the moment, I'll do that. I might still change that plan. I know you're supposed to plan your trade and trade your plan, but if there's so much momentum, then I definitely incorporate that information. Anyhow, I'm using a trail stop on the 4-hour chart. So anytime it drops down here, bounces, I'll move the trailing stop underneath the new 4-hour fractal. And most likely the next fractal would put this trade out of risk and into profit, most likely. Oh, I see my pound dollar got taken in. Let's see. Let me zoom in to the 5-minute. It's at 165.73. It's an extremely tight stop of 10 pips, in fact. I got a bit better price. I got 165.62.9, about a pip better. That's always a nice bonus. Will this trade work out? No idea. It's basically trying to trade the bounce off the 38.2 fib. And it's aiming for conservative bottom, consolidation zone here. Aiming for 2-to-1, a bit better than 2-to-1. Let's see how it goes. Anyhow, dollar CAD. So those who were wondering about this trade or were not present yesterday, we were talking about the triangle like this, saying this is an A, this is a B, this is a C, this is a D. The E can end anywhere, but usually does end at a fib. So let's put the fib on. This is a fib webinar and wave webinar, and you can see that it stopped at the 61.8. So anyone who took the 61.8 and had a pending order there and the 786 with a stop loss below the wave C, the technically correct stop loss, well, you did a great job now, because you're up about 200 plus pips, and you have maybe another 400, maybe another 150 or 400 to go. 150 or 350 to go. So I unfortunately didn't take this one. I wish I did. I was talking about it for so long, but I didn't put pending orders there. But I did take the break here. Yes, wave E doesn't touch the bottom indeed. Doesn't have to necessarily. It can. Doesn't have to. Of course, the validation level is the bottom of wave C. So there would be the stop loss, because that would be the technically correct stop loss. But anywhere at the 786, 886, 618 are the most likely, even the 50 fib. 38.2 and 23.6 seems very unlikely. Target for the dollar CAD is 113. The first target is 113.80, which is the minus 272. But I expect a bull flag at that spot and upside continuation up to 116, which is the minus 618 target, or even 117, I believe. No, 116 is my main target, sorry. Ooh, nice way. Way has been long since 106.45. That's a big one indeed. Awesome. Darshan saying the pound yen is moving nicely. Let's take a look. My pound dollar is down a few pips, I see. Dash and sees pound hitting 165.90. Yeah, it seems to be breaking through. That's not good for me because the trade idea is definitely geared towards an immediate bounce, and the fact that it's breaking through doesn't seem to be promising indeed. Well, I'm a bit surprised because I would have expected, even if it goes to 165.90, I would have expected a bounce here and then up. Well, that's why I traded it, of course. Otherwise, I wouldn't take it. But that doesn't seem to be happening indeed. Oh well. Got to take a risk sometimes. But usually speaking, a break of the Asian high by 8 pips sees a bit of a dip before you get up. Not today, apparently. Let's see. I'll have a bit more patience still maybe, but if it doesn't move down quickly, I'll maybe even close the trade force. Maybe I'll do it now because the idea really was, to be honest, was to close it, was an immediate turnaround here. And if it doesn't turn around right there, the stop loss is in the middle of nowhere in a way, so we are getting some downside here. If it moves up fast, I'll move the stop loss to above this top here maybe. Yeah, reduce the risk. It's really intended for an immediate turn. If it doesn't turn immediate, then might as well take it off. I'll move it for the moment. 165. It does look like we're getting some downside. 165.68. I'll move to. Let's see. 165.69. Oh, it's only 4 pips, but still. I'm even tempted to take it off totally somehow, but I don't like the fact that it broke above the 38.2 fib. Looks like a falling wedge on the M1. You mean a rising wedge way? Like this? Yeah, it does, doesn't it? That's, although this hit where I entered would have been actually perfect end of that rising wedge. We did break kind of above it, but now we're back in it indeed. That's true, Wei. It could be a reversal. It could be an overthrow or throw over. I'm not sure which one is, or maybe both are correct. In any case, price can sometimes accelerate above a trend line, above a channel, and that's called an underthrow or an overthrow. Price, in that case, accelerates or exaggerates a bit. And rising wedges are actually corrections, usually for more downside. But you know, the support line still needs to be broken for confirmation of that. And these are, of course, very important chart patterns. Not a big fan of rising and falling wedges because I think they're difficult to trade. And that could be just my psychology. I like contracting triangles are my favorite, absolute favorite, because they're very clear in their formations. It's very clear where the stop loss should be. It's very clear where they can turn, very specific fib ratios, very specific targets. I really think it can't be better than that. I love contracting triangles. They're my favorite formation. Bull flags and bear flags are good too. If anyone has questions about any fib analysis or wave analysis, let me know. Of course, this is a fib and wave session, so if you have any questions regarding these themes, by all means, now it's the optimum time to do so. I think we'll get a bit of a bounce here still. I'm worried that we're going to bounce here. But the question is, when we bounce, will we still see failure here for downside? So maybe I'm a bit too greedy. Maybe I should just click it out here. Other than that, maybe it's better just to leave the stop loss here. I'll leave the stop loss here. It's just a few pips risk. And I'll just let this play out by itself. Let's move over to the pound yen, in fact. Let's see. Pound yen 4-hour chart. Got a bounce at the 61.8 fib. I wouldn't be surprised actually if we move down to the 78.6 fib in this environment. It's very choppy. I think move down to the 165.90. It seems likely. The question is, do we bounce here at wet spot before we get to the downside? Let's put some fibs on this downside. We've taken out all the targets, in fact, of this correction so far. And the fib that's still valid, if one fibs all these down moves, on the 4-hour chart at least, the fib that's still valid, if we fib from retracement to target, the fib that's still valid is this one. A very shallow fib from 23.6 down to the target, back to the 23.6, down to the target again, double bottom. So any of these fibs, the 50, the 38.2, 61.8, seem likely retracements. Even the 78.6 could be bouncing spots for the move down to the 165.90. Is that something you're thinking about too, Darshan, or do you see it differently? Now, the 38.2 fib doesn't seem the most likely to me. I would expect a deeper one. 61.8 probably seems optimal. Small chance for 50 or 78.6 as well. Downside is, I mean, if that does happen, that is about 400 pips downside, or 500, depending which fib. So, of course, these are, I mean, putting the stop loss here is a massive risk. So the best would be to look for a price action signal. We talked about price action and support or resistance yesterday. And if you're a fib trader, then you could even trade these fibs, but the risk is tremendous in terms of pips. So a price action signal at the fib would reduce that risk. The other way of doing that is looking for price to get to the 61.8, waiting for the bounce there, not even taking the price action signal, but zoom into the 50-minute world, and once you get a crossover to moving averages, then take it to the downside. Or wait for a break of this trend line. Those are all confirmations, for instance, of knowing when the upside is over. Okay, now let's talk about the fact, is it worth trading to the upside? Maybe the price can go up to the 61.8. That still is 100 pips away from here. Is that worth it? Maybe it is. Because if you look at this 50-minute world, you can see that we have this consolidation happening right here. It's kind of like a falling wedge within impulses to the upside. You can see up impulse followed by down corrections and a falling wedge most recently. And we've broken out of that falling wedge to the upside. So seems like we have a potential to continue higher here on this 50-minute chart. Any hook back, for instance, we could put a fib on this very last upside and say, okay, if it bounces back to 169.30, that could be a bouncing spot up to 170.50 with a tight stop loss maybe below here, right? And here again, turning spot for that bigger downside. I don't know. That's something that could play out. Whether the downside happens, I would be looking for confirmation personally at the 61.8. Wouldn't trade it immediately, certainly not. Some price action signals there. Am I a big fan of this pound yen in general? No, not much, to be honest. Even this upside doesn't seem that attractive to me, but could happen. Here too, you might want to think about some confirmations. Well, if you use fibs, then you want to think about retracement fibs or target fibs, for instance. So in case of for instance, this fib, we can see if we put the fib on the 4-hour chart, like this, we can draw the fib accordingly again to the next fib whenever we hit the target. Here we hit the target, so we can take it from retracement to target. That's the new fib. And the target then would be actually a retracement level, right? We can also do it the other way around, though. You can also say, okay, this is, for instance, a first upside. If we break this top, then the minus 272 and minus 618 are targets. So you can use targets and fib retracements. How do you choose them is really depends on the structure of the market, various time frames, how they all connect to say, okay, the minus 272 seems more likely, the minus 618 seems more likely, the deeper fib seems more likely. It depends on the currency. If you want to be safe, use the minus 272. Generally speaking, the 786 fib aims for the minus 272, and the higher fibs, they aim most of the time for the minus 618 or higher. The 886 fib actually aims for the minus 180, but I don't have another chart. So for the moment, let's just say it goes for the minus 272. It depends also on the time frame. If we looked at the pound dollar, we were seeing, for instance, on the 4-hour chart that price bounced off the big 38.2 fib. That's a big fib. We should expect bounces there. The price bounced at the 50 fib. That was a big fib too, but it only bounced and then continued down again. If you're in a sell upon the break of this orange black line, let me make it orange, then your target should be this 50 fib because price will not break through that probably. The chances that price breaks through it's so small, it's not worth aiming for anything lower than that. That's a big, massive daily 50 fib. When price breaks orange, you shouldn't, any trader should not, any trader trading this on a 15 or 1 hour or 2-hour chart should never ever aim for anything lower than the 50 fib in this case, because that is a high likelihood bouncing spot. It's a daily 50 fib. And indeed, price bounces actually about 8 pips higher than that. And that's also good to then incorporate that a bit in your TPs. Never aim for the last pip because sometimes price can bounce earlier. So let's take a look at the minute chart. We saw that we got some follow through here. We broke out of the rising wedge. We got about a 10 pip fall down to 165.56. We are making lower lows and lower highs on the 1-minute chart, so seems like we're getting some downside, luckily. Just a bit higher than I expected, at 165.68. But you never know. We got some 1-minute positive action here, so If you really want to, depending on how much risk you take, I hope you didn't take too much risk anyhow on a small scalping trade like this, but you can reduce it if you want to use the 1 hour high here, the 1 minute high, just trail stop it by a pip. You could even move it to 165.66, thereby only risking 4 pips. If you feel uncomfortable with the trade. There's nothing wrong with trail stopping it. It's a scalping trade, so there's nothing wrong with trail stopping the 1 minute chart necessarily in this case. I think I'll wait. Well, we do have a bearish candle here, so it might be worth it even. I wanted to wait to see if we get a bit more bigger punch and then one more downside, then I would have trail stopped it. That was actually my plan. But we are seeing some bearishness kick in again, so if we break this bottom, then I think I will trail stop it again. Oh, yeah, sorry, sometimes I keep, because it's interesting to me, so I was just curious how this 1 minute candle, if it can push through this orange line. It doesn't as yet, but I don't want to bore you with looking at the 1 minute chart. Let's see if there's anything else. Dollar yen. I had a very big spike up. I'm not too interested in the dollar yen at the moment. It could make this upside here to the magenta. I think yesterday we talked about the fact that if it breaks above these tops, it could become interesting buy. So that wasn't all too bad idea, but it was a news event triggered one. In any case, we could see maybe the continuation up to magenta. Not too interested in that particular trade personally. Seems risky to me, just because we're halfway at the magenta and purple line. Don't like trading it that much halfway a certain pattern. Sorry. New Zealand yen could be very interesting, by the way, because New Zealand yen is an uptrend. It made a retracement here. Maybe we can see follow through, something to keep an eye on. However, if you trade this breakout here to the upside, I would put my stop loss here, personally, not the closest bottom. And the reason is because even if we move up above the moving averages and we get slammed one more time, we'll probably break this bottom, but we'll probably not break this bottom. The blue circle. So if you use a tight stop loss here, it's risky because it's quite choppy upside. And therefore, there is the risk that if you take the long in here upon the break of the moving averages, the currency could slam down, take out this low, and then bounce up. Anytime there's a new 1 hour fractal, anytime actually we make some low in here, though, you can move the trail stop right below that low and reduce the risk immediately. Okay. With the Kiwi in recent times, I think that aiming for TP about, I don't know, 1 to 1 or 1.5 to 1, 1.25 to 1 is a decent R2R for the New Zealand dollar. Not sure about the New Zealand yen. New Zealand dollar, Aussie dollar, dollar CAD, these currency pairs don't move much. So when you get a 1 to 1 on these pairs, or 1.2 to 1, that's actually not too bad. It's actually a pretty good R2R. I'm talking about the hourly chart now. Okay, with the euro yen, pound dollar, dollar yen, trail stops do have a bit better expectations, especially recently with these big trends, of course. Ah, good. Pound dollar is moving down. Excellent. Getting the rejection here indeed. So yeah, I'm going to trail stop this too. We broke our orange line. Yeah, just was okay indeed by the skin of the teeth. 11 pips was just enough to survive. Let's see, 73 went to 68. About halfway to stop loss. Good. So happy about that. So we can move. I guess I'll just move it to break even now. We can take the risk off the table because we have a high at 165.608. Yeah, probably not out of the woods yet. Maybe it's moving the stop loss a bit too soon, indeed. So I think about it, because always the question is, how much of a pullback do you get before you get one more downside? The safest stop loss, to be honest, is still above this top. Where do I have my stop loss at the moment? I have it at 76. That's a mistake from my side in my speed. Supposed to be 159.69. Still have it at the top, indeed. Or I was supposed to have it at the top. But I made a typo mistake there, I see. It's good I checked. Oops. Always good to double check your trade management, I can see. Yeah, so that's the safest stop loss still, to be honest, because moving it down, as Darshan said, is risky, because we could have a 5-minute retracement of this downside before we get down. We might not have any downside after this at all, and then if you still have the stop loss, you might still lose 6 pips. But if you're aiming for the 165.40, moving the stop loss is a bit risky still indeed, because we can still see one upside and then down. That's the problem. One minute head and shoulders, yeah, maybe. Like this, indeed. Could be, yeah. Looks like we broke the neckline in that case, this orange line. If someone feels uncomfortable with the trade, though, I would say just, there's still a good chance we will move down in one shot without giving a very big retracement. Moving it to break even means you can still survive and move up to the 50 fib and down. If that helps your psychology, then there's nothing wrong with that, I would say. It depends on how if anyone joined me here, how they feel about that. It's just the thing is, if you do move it to break even, there is a chance you get tagged out and then still see it your way. That's the only thing you have to accept as a risk, and not get too much annoyed about that, right? No revenge trading. For the moment, I think. Let me take a look at the 5-minute chart here. There should be some more downside, I would say, but not too sure, in fact. I think I'll move it to break even. I don't like it because you see, the thing what is always good is the fact that you'll get some reaction. The question is how much. It could be a small hook back and more upside, or there could be a tremendous fall here. We don't know which one. At the moment, we actually broke the level I was thinking we would turn, and we got some downside, but I don't know. This is a pretty big, strong 1-minute candle as well. I think I'll just move it to break even. 165. It takes me out, then who cares? 165, 6, 165, 62. All right. Anyone else have a preference for a pair still? Or any questions? Trading a tick chart. How do you do that actually? On where do I find that? Sorry, folks. I'm just trying to find a way below the tick chart table. Ah. Okay. Found the tick chart tab here. Doesn't seem to be doing much though. It looks flat. Ah, I should have a tick chart script. Okay. Gigantes is saying I need a tick chart script. This doesn't look like a lot of. This looks very, very. This looks like price action that doesn't have any momentum. I'm just kidding. Yeah, it's hidden to the left somehow. I don't know. You see, I don't like this price action here. We got a 1 minute engulfing twin. We have, this is more looking like a bull flag. I don't know. It wasn't really what I was looking for. I think it's better to exit at break even because I don't trust it. This is bullishly aligned on the 1 minute chart. 5 minute too, by the way. I don't know. It could still go up, make double bottom and down, but I think it's chancing it. By putting the stop loss here, I think it's really not much makes much sense. I think it's better just to, it was a nice try, and if it doesn't go down, what can we do? At least we didn't lose anything. What I really wanted to see was an immediate turn here and a stronger fall, to be honest, which we never really got as yet. So, well, maybe now, who knows? Let's see. Let's see. Not sure about the tick chart. I would have to get that script somehow, I guess, or an indicator for that, apparently. So maybe Tarantula has that. I'll ask him. Let's see. Pound. No, wait. Euro odd. Someone asked about the euro odd, I think. EA, yes. Oh, no, maybe that's an expert advisor. Figantas is talking about expert advisor. I thought Figantas was asking about the euro odd. That's funny. Both are EA in a way. Talking about the euro odd, though, we might as well look at it. Break of this orange line would definitely be significantly important because, or just important because you can see that we could have a potential to fall down to the -272. That would be an interesting trade. Same story for pound odd. Actually, we already broke out of the pound odd downside, and we can see that there could be a fall to this -272. And actually, it looks like we broke out of a trendline break, hooking back, and we could fall down right now, actually. That's how it's looking like. That's how it looks like to me, at least. It looks like a hook back, and it's close to a fib. That would be an interesting fall to 178. I don't know if that's going to happen though, but it sure looks like it's at a resistance spot. We are definitely in an uptrend though on this 50-minute chart. Maybe if it breaks this bottom, for instance, then we could see the start of a fall, maybe, on the pound dot. I don't know. Looks pretty good actually. I think it could be worth it. Let's see. I'll put a pending order there. But I'll put the stop, I will put the stop all the way here though, because, or you know what, if we wait for a break of this level, I'll put the stop loss above the 78.6. Because even if it hits the 78.6 fib, I don't want to put the stop loss right at the 78.6. This is a pretty high fib, so maybe I'll do that. Let's see. $183.04 maybe. Stop loss at 184.03 or 07. It's about 100 pips. But the take profit could be really literally at 178. Seems a bit exaggerated. I'm not going to keep it to 178 probably. I'm going to trail stop it for sure. So I won't get there, but I'll put it there. Let's see, the low here is at 183.18. So I'll go a bit higher, maybe 183. No, 183.08. 183.08, 184.07. Okay, so that's just an idea. Let's see how that pans out. Maybe it's a horrible trade idea, but I think there is a good chance, a decent chance. Wait, let's see. Yeah. I think there's a decent chance that if it breaks 183.18, that if we break this bottom, basically, that we will not break the 786 fib. I don't know. I think the safest stop loss is still here. But if we break this bottom, we're in any case making a lower low. And even if we hit the 786 fib, that could be the turning spot, and the trade is still safe. It's a semi-technically safe stop. Safe enough for me for the moment. So that was my idea, and I guess we'll wrap it up today. We're reaching the end of our session, so thank you so much for joining. Tonight we'll be back with the best candlestick patterns with Talantala at 5 p.m. GMT and 6 p.m. Central European Time. Hope to see you then, and wish you all a great trading day and day. Cheers.
The organizer has ended the